Welcome to the brain behind every billion-dollar brand. This is the engine room of every successful business, and it's the difference between a great idea that fizzles out and one that changes the world. Money doesn't grow businesses on its own. Smart money management does. From giants like Tesla to tiny startups, the world's most successful empires aren't just built on great ideas, they're built on how those ideas are funded, managed, and scaled. This is where the real game of business begins, so let's get started. What is financial management? In simple terms, it's the strategic process of planning, organizing, and controlling a company's money to hit its goals. Think of it like the GPS of a company's money. It guides where the money should go, how it should be used, and how to avoid crashing on the way to profitability. Controlling spending. For example, let's look at a company like Tesla. When Elon Musk was launching the Model 3, they had to make massive investments in production lines, raw materials, and manpower. Financial management was the invisible force behind all of that. It was used to raise funds through stock sales, allocate budgets to each department, monitor cash flow, and plan for long-term returns. Without strong financial management, even a revolutionary product like the Model 3 could have become a financial disaster. The 4 key objectives. Every business, no matter the size, has 4 key financial objectives. You can remember them with the acronym PLOS: profitability, liquidity, optimal utilization, and stability. Profitability, this is all about making more money than you spend. It's the lifeblood of a business, but beyond just making a quick buck, the real goal is wealth maximization, increasing the long-term value of the company for its owners and shareholders. Liquidity, this is all about having enough cash on hand to run your daily operations. A business can be profitable but still go bankrupt if it can't pay its short-term bills. Think of it like making sure your car has enough gas in the tank for the road ahead. Optimal utilization, this means using your funds wisely and avoiding waste. Every dollar needs to be working as hard as possible for the business. Stability, this is about maintaining financial discipline and avoiding overspending. It's what allows a company to weather storms and stay strong even when the market gets volatile. It's not just about earning money, it's about having the mindset to manage it properly. Every business, from a tiny tea stall to a giant corporation, needs financial management. Here's why. It ensures that money goes to the most efficient areas. Do you invest in marketing to get more customers, or do you invest in new tech to make your product better? Financial management helps you make that call. Risk management, it identifies potential financial risks early and helps you create a plan to avoid or reduce them. Financial management provides the hard data and insights you need to make smart, strategic decisions. Think of financial management as a 360-degree view of every money decision a company makes. Investment decisions, this is about where to put your money to get the best returns. Should Apple invest more in research and development, or should it open more stores globally? Dividend decisions, this is about what to do with your profits. Do you share them with shareholders, or do you reinvest them back into the business? Companies like TCS are known for their consistent dividend policies, which builds incredible trust with investors. Liquidity decisions, this is all about making sure you have enough cash to run your day-to-day operations. A business without adequate liquidity is like a car without fuel. It might look good on the outside, but it's not going anywhere. The 3 core functions. Financial planning. This is where you forecast your financial needs, estimate how much capital you'll need, and decide on the best structure to raise that money. Startups do this all the time, creating 3-year and 5-year financial projections before they even think about looking for investors. Financial control. This is the day-to-day stuff. It involves budgeting, analyzing your finances, and monitoring every single expense. Maruti Suzuki, one of the biggest car companies in India, uses detailed budgeting and cost control systems to maintain its leadership in the market. Financial decision-making. This is where you put everything together. It's where you make the big calls on where to invest, where to raise money from, and how to use your profits. Apple, for example, regularly buys back its own shares and declares dividends, and this is a direct result of sound financial decision-making. If you're finding this stuff helpful so far, make sure to smash that like button, share this video with someone who needs it, and subscribe for more insightful content on business and finance. The principles that make finance work. Financial management isn't a free-for-all. It's governed by a set of core principles that make the whole system work. Higher returns always come with higher risks. The key is finding the right balance that works for your business. $100 today is worth more than $100 a year from now. This is because of things like inflation and the potential to invest that money. Profitability versus liquidity. But it can't come at the cost of liquidity. You need to be able to pay your bills today, not just hope for a big payday tomorrow. Principle of matching. Match the duration of your funds with their purpose. Use long-term loans for big infrastructure projects and use short-term loans for day-to-day expenses. Principle of diversification. Don't put all your financial eggs in one basket. Spread your risk and never gamble on one single source of income. Apple's investment portfolio is well diversified, which provides stability even when the market gets shaky. Financial management isn't just for companies. It's just as important for you as an individual. Budget your salary. Avoid impulse credit card use. Create emergency savings. Plan your investments, whether it's in mutual funds or retirement accounts. Let's say you earn $5,000 a month. If you manage your finances well, you track your expenses, save 20%, invest 30%, and spend 50% wisely, you'll be financially secure, even in an emergency. You can use apps like Money Control or Cred to manage your personal finances, just like a CFO manages a company. Even with all these principles and tools, financial management still faces some serious challenges. Fluctuating market conditions, rising costs and inflation, regulatory changes, poor forecasting, fraud and misreporting. Just look at the COVID-19 pandemic. Even large, established firms like Air India and Jet Airways faced financial collapse due to poor cash flow and high debt, which highlights just how critical robust financial strategies are. The financial world is evolving at a breakneck pace. Here are some of the modern trends. Financial management in different industries. Financial management looks different in every sector. In manufacturing, the focus is on cost control, capital budgeting, and production efficiency. In banking, it's all about liquidity, risk assessment, and regulatory compliance. In it, the focus is on R&D investments, managing employee costs, and handling global operations. In services, it's all about time billing, resource allocation, and personnel costs. A company like Infosys splits its finance teams into different groups, one for projects, one for international operations, and one for payroll, to streamline global decisions. Financial management isn't just about money. It's about control, vision, and execution. From making smart decisions to raising funds to managing risk, it's the force that ensures a business doesn't just survive, but truly thrives. As the great Peter Drucker once said, "What gets measured gets managed." And financial management is all about measuring, planning, and steering your organization toward success. Thank you for watching, and comment below with your thoughts on financial management. Until next time, stay curious and keep hustling.